Hi, everybody. Welcome to another episode of Tax Sale Insiders. I'm your host. I'm Brian Seidensticker. I'm CEO of Tax Sale Resources. With me again today, we've got some fascinating stories from Carl Spielvogel last episode. It's a two-part series, and last time, Carl, you talked about unique scenarios and some crazy stories of pre-auction scenarios. What folks could do or might find themselves into creating deals prior to the tax sale auctions, and this week we're going to talk more about what are the potential scenarios and options post sale. So let's again, I apologize. Welcome, Carl. Thanks. Thanks for joining us. Welcome back.
Well, some of these are examples that are pre-auction, but I'm also going to talk about how they can be post-auction too.
Okay.
So so some of this is pre-auction stuff, but I'm going to talk about how you can go back afterwards, because what we like to do is, go through this, is excess proceeds or surplus funds. Okay. And I'm pretty sure, but basically surplus funds are whatever's left over after the auction. For example, let's say that there's a tax sale, it's going for $20,000, it sells for $200,000. Well, whatever's left over, whoever owns it at the end of the sale is entitled to that. Now, there's a couple of caveats there. If there's judgments against the people, they have to come out. If there's like a mortgage, that has to come out. But basically, that is the excess proceeds. And this is where got two ways. The way we mainly do it is we go pre-auction, buy out the shares, and we collect excess proceeds, or buy out the interest. But what you can do, and a lot of people make a lot of money, is after the sale and there's excess, you can go back to the owner or the heirs, and I think a lot of people charge 30% or 40%, and they'll make a deal with the people to help them get excess proceeds. So this is a way that you can do it pre and post auction. But I'm going to talk about this one here. We did this one pre-auction, but this is when, again, this was going to sale. If we wouldn't got involved, it would have gone through, and then you could have gone to them afterwards, build out the tree, and help them get the surplus funds. Especially when they're heirs like this, it's much harder for them to go through and get the surplus. So this one was going to tax sale. And what we did is we bought out multiple shares over time, and it sold for $216,000. I think it was like $25,000 in taxes. Our goal, though, when we do this, by the way, is to get 100%, clear the title, and keep the property. But if we can't, then we let it go through for the excess. So this went through the sale. 216. So there's like there's probably 180,000 or so in excess proceeds. So here's the family tree that we built out. And we just basically called the heirs up. And it was, again, sort of like a fractured family. Some people didn't know each other. They weren't getting along. And of course, it's real important to have a genealogist when we do this. So we just bought out their shares, and then we'll be able to collect. We ended up with 92% on this deal. We'll be able to collect 92% of the 180 on this deal. So this deal will be a huge home run deal. But how you can do this post sale is, you get the report. You guys give them the report. You can see the excess proceeds from you guys, and then you can go back. And, what you have to do is go back and take the owners. We put them in bin verified. If they're deceased, then we'll build the family tree. Let's say they're alive. Then, you just go back, and then you skip trace, find them, and then you can work a deal to help them get the surplus funds. So this deal you could have done after the sale, because if we wouldn't have gotten involved in this, nobody else would have taken this on and bought out the shares. So this would have gone through the sale. There would have been 180-ish thousand excess proceeds. You could have gone to each of the heirs and say, hey, I can help you get some money, and whatever percentage you charge, and you could have put this together and gotten 30 or 40% of the excess proceeds for helping them out. Now, you need to know each state is different. In North Carolina, though, you can't do this. In North Carolina, you can only get paid $1,000 for helping somebody get surplus funds. Okay.
Because each state's, because their statutes don't allow you to actually, do it on I'll say commission based.
Yes.
Gotcha.
Although there's some structured buyouts and stuff. So that's one. Let me go through some of this stuff. And then again, we also do title search because we go through here to the next ones. And so here's another one. But again, what we'll also do is we will do a quick title search because sometimes, I'll show you an example, sometimes there'll be judgments. Well, let's say it's going to the tax sale and there's a judgment. You can buy the judgment and go for excess proceeds on the judgment. So we've done that several times, and I'll show you a couple examples later on that. So this was a pre-auction, but it was 10 different properties we bought out for $1,500 a piece. It was a company that was defunct. We searched down the old president, got them to sign over the property to us, and we bought 10 properties pre-sale. So this one, we paid $1,500. It went through the sale for $103,000. So there's going to be, because of taxes, there's going to be about $80,000 excess proceeds. We're entitled to 100%. But let's say, again, you're doing your research, you're going back through, and you're like, wait a minute. You get your money. There's 80,000. You could have called the company and said, "Hey, I'll help you recover this stuff," and it's 30%. Again, these people just walked away from this excess. So this would be a great way for you to go back. And here's one thing that's important too: is this was a corporation, and so you just go to the Secretary of State, you put in the corporation. It'll show you who the president and the phone number, and you just call them. It's that simple. And that's what we did. And we just called them, and that's how we got those properties.
Huh. Wow.
And so we probably made $300,000 because we took some of their properties, we subdivided them, and then sold them off. Just that was one pre tax sale stuff.
Wild.
And there's the commissioner's deed where it sold. And again, this is another. Now, we're all buying these out ahead of time, but this is the same strategy you can use to get the surplus funds. And here's sort of one thing. Well, let me go through this one. So again, this is just one. It was tax delinquent, vacant, deceased owner. Again, these are the best avatars. So again, we like pre-auction, we'll drive by. We noticed it was vacant, and then we built out the family tree. This is sort of and we end up buying 3/4 of it. We let it go through the sale, and we made $66,000 on the excess proceeds. Now, we couldn't end up getting the last 25%. She was real difficult, so we bought out all the other shares and made $66,000 on this one.
Interesting.
And then here's another thing too. This was actually a foreclosure, so this was not a tax one. But what I want to show about this one was, and it relates exactly to the tax ones. So this is a husband and wife. We skip trace, found them, but when we did our title search, there was an IRS lien for $10,000. So what we did is on the excess proceeds, we bought out their shares, let it go through. And then the IRS lien was only good for probably about 9 more months. We waited till the IRS lien expired, and then we applied for the excess proceeds. Again, if there's judgments and stuff in here, you could either buy the judgment, you can pay to get it released, or you can let it expire. So a lot of these things, we will simply, if there's judgments in the excess, we'll wait for them to expire. Sort of like a niche within a niche. Mm-hmm. And this is weird. I don't know if I talk about this. Is interesting. So we bought out half of it. There's underage son. So, we couldn't buy his share out. It would have been, so we just bought out half of it. Well, let me jump to this one. This is another one. And again, this was a foreclosure, but again, it relates to the tax stuff too. So we ended up giving the heir $500. Again, they were just going to walk away. It was messy. We gave them $500. We ran title, and let me see. There was a judgment to this. Travis Blackman owned a judgment for $11,530. So what happens is, because we're buying the heir's share, her judgments now attach. So that's why you're doing these things. So what we did is we said, okay. So we called up Travis Blackman, and I'm like, hey, my company, Alliance Finance, we buy old bad judgments. I noticed your judgment is like 8 or 9 years old, and just curious to be interested in selling it. And he says, well, what will you offer me? And I said, 2,200. As soon as I said 2,200, he's like, sold, done. So obviously I paid too much for this judgment. He probably would have done $1,000. So we bought the judgment, and this is what my attorney did, so we could buy the judgment. And then this is where we applied for the excess proceeds. So we hired an attorney to apply for the excess proceeds. And this was the check. So we made $19,000 on this, was just for the judgment part in the excess proceeds. So always looking for that little niche there. And that was a perfect example. Spent $2,250, made extra $17,000 on the excess. So
very interesting.
And no, it's weird. There's always different stuff. And this was a weird one. This was going to tax sale, and we skipped through it, and we found the lady that owned it. We called her up, and she goes, I don't own this house. I'm like, what do you mean? She goes, I don't own it. I'm like, I went bankrupt. It's gone. So we did a title search, and this was, you remember Countrywide?
Uh-huh.
They had crap paper, right? So Countrywide sold it out to, was it Nations Bank at the time? Nations Bank foreclosed, and then they satisfied the mortgage. This happens occasionally. That's why you do a quick title search. We just went in and did this title search. We're like, wait a minute, this house is free and clear of the taxes. The lady doesn't think she owns it because she thought it got foreclosed. I've seen this happen several times where they're old Countrywide crap paper, and they get satisfied. There's a couple other of these. So this is weird. That's why you do that quick title search. So long story, we paid her $10,000, and we made, I think we made $42,000 on it.
Interesting.
So it's like, you got to be a little bit of a private investigator. You got to run the title. And, that's one of the weird things that happens occasionally is especially with Countrywide paper. But it was just weird, but it only took a second to look at the title search and go, wait a minute, this mortgage is satisfied. So it was just the taxes.
Noticing the discrepancy there.
Yes.
Well, Carl, I know you mentioned this last week, but I'm assuming with these sorts of deals, right? If you make it sound easy, you've done this a lot of times, right? But folks probably doing this for the first time are going to get to some point and go, "What do I do now?" Right? And I think you mentioned that you work with folks on joint venture, partner with, whatever you want to call it. Do you do that with the post-auction scenarios as well?
Yes. Yeah. We're good at tracking the people down. There's only like 4 people we've been not able to find. So we can try to get my little, so yeah. So we're really good at, so if there's a post auction where there's a lot of stuff, we have all sorts of skip trace programs, and, we'll do everything from go on people's Facebook page to stalk them, find out who their friends are. But yeah, we can help track people down. We can help with these kind of deals, post auction, also on doing those and setting them up. The only thing is, I'm more familiar with the laws in North Carolina. I'm not as familiar in other areas, but I can still joint venture with that. We just have to have a good attorney that really understands the laws, in the other areas.
So, okay. Yeah. And I'll touch on that. But I guess, so if folks come across, deals like this, they want to reach out, what's the best way to get a hold of you again?
Well, our business phone number is 704-777-7777. So it's pretty easy number to remember. And this is my direct number, 704-995-5385. And yeah, this stuff, again, it seems a little bit, I know I went over some stuff, you're like, wow, this is hard. But once you get into it and you learn it, it's not as hard as you think. It's being persistent, pivoting.
Persistence is key, like you said.
Yes, it's persistence. And then it's also when you hit an obstacle, then it's pivoting around it, because
right.
You're going to get stopped. Like, they're going to say something, or there's going to be a problem, and you got to take that step back and say, how do I solve this?
Right.
It's another way. So you got to also pivot, and you got to have really good resources, whether it's attorneys, skip trace programs, genealogists for the deceased people. You got to have those resources too.
Right. Well, I know you said it can be easy, but I know myself, and I'm sure many listeners are going, okay, well, maybe easy after you've done this, 100 times like you have, Carl. So again, for folks that maybe come across these, unique scenarios like Carl went through today, and you want some help, certainly reach out to him. Also, I guess Carl mentioned this, but I want to reiterate, obviously, Carl's experience is in North Carolina. Every state is different. Definitely before you do anything, please, talk to an attorney, familiar with that state, and they can help guide you on what you can and can't do in that specific state before you get too far down a rabbit hole, and definitely before you get yourself in potentially in trouble. Yeah. Well, Carl, I guess anything else post auction that we want to hit on today?
Yeah, I think it's different in different states. So it's learning that. And then again, it's just learning how you can, structure it so you can, help these, because you're helping people post auction. You're helping them get money that they don't know how to get.
Right.
So
a lot of times don't know it's there, right?
They don't know it's there. First of all, they don't know how to get it. And and it's that's what I really like about the business, is you can make money helping other people get the money. So that's about all for that. So,
well, Carl, I always appreciate your time and the fascinating stories that you tell. I'm sure everybody here listening is somewhat mind blown, because these are all very different, unique things that if they haven't come across, they will probably come across, but usually is a stuck point, right? I don't know what to do from here, right? Let that file go. Now that they can reach out to you, they can keep going on that particular scenario. So anyway, thanks again. I'm sure we'll probably have you on again sometime in the future, talk about some other crazy stories. We've got many, many more. I've heard a couple of them. So thanks again.
Sure. Appreciate it.
All right. Thank you, everybody, for listening. Good luck out there, and look forward to talking to you next time.